Hi, my name is Patrick Ord, and I'm with Advanced CFO. At Advanced CFO, we engage with many clients that want to start to look at their financial statements more strategically. What we find is with many clients, these may be startups, these may be family-run companies that now they have a new generation of ownership. These may be companies that have been acquired and they want to take things to the next level. But in any case, they want to look at their financial statements and extract more meaningful information from them in order to operate their business more efficiently and more profitably. And so what we're doing in this web series is we're going to talk about financial statement literacy. We're going to talk about how most clients, when we start with them, what their financial statements look like. And we're going to walk through a business case, and this is a real company, and we're going to talk about what it looked like when we first became engaged and what it looked like as we were able to clean up their financial statements, reorganize them, and establish a system where the owner can look at them more strategically, extract more meaningful information, and govern their business more profitably. And so thank you for joining, and I hope you enjoy the series. Okay. We're going to walk you through a business case right now. This is a real company that we engaged with a little over a year ago. It's an e-commerce company. And the first thing we did when we got involved in this company is we asked them for the prior 3 years' financial statements. And when I say financial statements, I mean primarily the profit and loss or income statement and the balance sheet. There's also the statement of cash flows that we won't talk about much in this web series. So when we get profit and loss statements, the first thing we do is we look to see how well they're organized, and then we also look for the accuracy of each input, and then we also just get a sense for how we might be able to improve the organization and categorization so that we can extract more meaning out of each statement. And so in this case, the company gave us a series of financial statements which for each month of 2018. And the first thing we did is we input these in a spreadsheet so that we can compare month to month. And this month to month analysis is really meaningful for a couple of reasons. One, we can start to see trends. And then the other is we can start to see maybe the level of accuracy, and we can start to get a sense for if they're on a cash basis or an accrual basis accounting. And when I say cash basis or accrual basis, what I mean is that on a cash basis, you will book sales when you receive the cash, as opposed to when you earn the income. And then under your cost of goods sold section, you will book the expense when you actually send the check out as opposed to when you actually incur the expense. And what we want to do is we want to be able to book the sales at the same time when we earn the sale, which is when you ship the good, and then you have your costs aligned with your sales in the proper period. Otherwise, your margins are all over the place and you really don't have a good sense for the competency of your business model. And we'll talk a little bit about that in our next slide. But there's a couple things that we noticed really quickly about this business. We noticed that there's seasonality in revenue, and I've established up here kind of what percentage of revenue they get in every month. And we can see that May is a big month for them. We can see that November is a big month. And then we kind of see that they have a couple different lines of business or sources of income. We see that their cost of goods sold is kind of all over the place. We don't have things being booked to some expenses on a consistent basis. And that kind of concerns us because then we wonder, it's going to mess up our margins if it's not consistent, and that speaks to it not being on an accrual basis, but rather on a cash basis. We look at their gross profit margins, and we can kind of see how, as an amount, they're kind of all over the place, which is to be expected because they have seasonal revenue. But we really want to establish where each of these gross profit margins are as a percent of sales. And so that's something that we'll do in the next slide that we show, and we'll show how that becomes meaningful as we try to extract more strategic information from it. And then we look at some of their expense categories, and we can see that they've tried to group these expenses by categories, but there's an opportunity to make these groupings more meaningful. Here they have administrative salaries, for example. Here they have marketing salaries. Here they have operations salaries, and then they have payroll expenses. We like to see, a lot of salaries grouped together so we understand what our total people spend is. We like to see office expenses grouped together. We like to see all marketing expenses grouped together. And that way we can start to see that, what our consistent spend is for each of these categories. We like to understand what the attributes of each expense are. Like, is the attribute, is it a fixed expense? And salaries, we would expect it to be fixed, and so we would expect it to be pretty consistent. But as you look here, it kind of jumps out all over the place, and so that can be a concern to us. And then we don't have anything input in a lot of prior periods, and so there hasn't been a lot of discipline to booking to the right categories. So we expect that maybe there were costs in these periods here that might be captured in some sort of another line item somewhere else. So this obviously needs some cleanup to it. And so this is where we start, and with the next slide we're going to talk about the next step to get this thing organized.